Tip number 3 for provision on terminal tax is to cover a couple of points, effectively debunk some myths. So one of the myths is secondary tax. We've had a lot of clients who will say to us that they've got a second job for whatever reason, or one of their employees has, or even one of their children, and they have to go into a higher tax rate, the secondary tax rate. And for them, they say, well, it's not worth it, I'm taxed so much more. But the rationale behind that is the IRD don't know what you're on in your first form of income source in terms of tax. So if you start to go over the $70,000 threshold, or even with these new rates start to go over the $180,000 threshold, then they're taxing you at a higher rate on your second source of income. So when it comes to year end and you complete your income tax return, that you don't end up with a big tax bill. So that's what it's trying to avoid. What it means though, is if you were taxed at a higher rate and you shouldn't have been, and maybe your first form of income was earning income that was significantly less, then you will get a refund. So you're not going to be out of pocket. It's not going to be taken from you. You will get that refunded when you complete your tax return. Okay, and the second one is tax bank account. So we recommend all of our clients have a separate bank account that you put your tax in. Also to put your GST in. So when you get to these dates, you're putting money aside in anticipation of us or your accountant saying to you, you've got tax to pay on the 7th of May, which is the latest one coming up. And you go, well, actually, I haven't got any cash sitting around, I've already spent it. If you get that bank account, which we recommend to all of our clients do, then you've got the money set aside and it's no problem. It's already taken care of. Don't be tempted when things are getting tough to dig into that and start spending it. And it could be on, you need some money in your personal life, so you're going to take it out of there, or you're looking at buying a vehicle, so you take it out of there. Don't go down that path. The third point is cash flow. Cash flow. When your accountant says to you, you've made $1 million profit, now you've got tax to pay on that, and you go, I don't have $1 million in my bank account. You need to understand your cash flow. You need to understand what is in and what's coming in and out of your bank account. So we have had other posts and videos where we talked about your profit and loss statement, and that has income and expenses. But items that go through your balance sheet, for instance, don't get included in the profit and loss, okay? So anything that goes through your bank account, which can include repayments of debt, which can include drawings, that don't get accounted for in your profit and loss, which gives you your net profit figure, all affect the cash flow. So you need to understand what is going through your bank account. You need to be able to produce a cash flow statement, which you can do via Xero, for instance. There's a cash flow report that you can print in there to give you an understanding of where the money is going to. So it's highly recommended that you all get a grasp on where your money is going. Remember that the net profit that you make, let's just say 33%, we're not using the company tax rate, we're using, say, your personal tax rate, is gone in tax, okay? So that still leaves 67% of cash. So where has that gone? Another good tip is to understand that, to have a personal budget, and we've got templates for this, okay? So you can DM us, we'll send it out to you. Keep a record of what your income and expenses are from your personal living expenses, because that can slip away really quickly on where all your funds are going. And it could be that your drawings, for instance, that if you're paying things out of personal expenses out of your business, set up a drawings code for it. So if you were paying your home mortgage repayments out of your business bank account, set up a code called drawings mortgage repayments, so you can actually see how much is being taken out of the business each year. If you were paying your groceries, God forbid, out of your business bank account, set up a code, drawings, groceries, so you can see where the money is going once again. DM us if you'd like a copy of a budget template. The other thing that I love, would highly recommend, is set up a Xero for yourself personally. So you've got all of your personal bank accounts in there, keeps track of your groceries, your running costs of your house, your rates, your insurance, etc. And even when you go to the bank to ask for some borrowings, whether that's personal or in the business, they will be asking for a statement of financial position, which is your net asset position of you personally. Now, most people don't know this and don't have any record of it. If you're doing this on a regular basis, you've got a grasp on what your net assets are, what your expenses are. You can quickly provide that information to your bank, and like I said, you know where the money is going, and that's a really important element. Hope these tips have been useful.